Hi guys and welcome back to my YouTube channel. If you are new here, hi, my name's Eva and I'm a mortgage power planner. Now in today's video I'm going to be answering the most frequently asked questions when it comes to buy-to-let mortgages. I feel like whenever you ask someone, right, what would you do if you won the lottery? Everybody that I've ever asked this question to has said invest in property. As let's face it, it is a good investment and probably I'd say one of the quickest ways of creating passive income. But why wait until you win the lottery? Why not see if you can do it without winning the lottery? Now, property investment isn't for everyone, right? Let's just put it out there. But I do want you guys to make an informed decision, hence why I'm going to go through the most commonly asked questions to give you a bit of an idea as to what is involved and how to actually get a buy-to-let mortgage. So without further ado, let's jump right into the video. Oh, and just before we jump into the video, if you could hit it with a like and also subscribe to my channel, that would be highly appreciated. Right, let's jump right in. So question number one is, how much deposit will I need? Now this varies from lender to lender, but the typical criteria is to have a 25% deposit saved up. However, some lenders will require as little as 15%, so it really depends on who you end up going with. That's why speaking to an independent mortgage advisor can really help you here, as they'll be able to compare the full market for you. How much can I actually borrow? So unlike a residential mortgage, a buy-to-let mortgage is normally calculated based on the rental income that you're looking to receive, rather than actually going off your personal income. Now they do also take your personal income into account, but this once again varies from lender to lender. Every single lender has different criteria. So lenders will typically need the rental income to be at least 125 to 145% higher than the monthly mortgage repayment. Now remember, with the buy-to-let mortgage, the monthly repayments are actually interest only, which in itself makes them a lot lower than obviously a normal repayment mortgage. But just to give you a bit of an example, if you were to receive £500 per month in rent on the property that you're looking to buy, the figure would be in the region of £80,000. And once again, this will vary massively from lender to lender, so it's only a very vague indication as to how much you can borrow. So stick your deposit on top of that and that's your purchase price for the property. So what costs are actually involved in a buy-to-let mortgage? So first of all, you normally have stamp duty. So if you already own a property, so you already have, let's say, your own house, there will be an additional stamp duty involved in purchasing the new property. So with additional properties, the stamp duty land tax is an extra 3% on the existing bands. So I don't know if you're aware of the stamp duty holiday that's in force at the minute. If you don't know what I'm talking about, check out this video as I've already discussed it in more detail. But basically what that means is that normally any property up to the value of £125,000 carries a 0% stamp duty, so you don't pay any stamp duty. Now with a buy-to-let property, if it's obviously a second property that you're going to own in your own name, that will carry an additional 3%. So if we take a property valued at £100,000 for example, the stamp duty on that would be £3,000. So you have to take that into account as well. Aside from the stamp duty, you've got the likes of your arrangement fees for the mortgage, which to be honest tend to be a lot higher than for your residential mortgage. So bear that in mind as well, as there could be in the thousands of pounds yet again. Then you've got your standard fees such as your conveyancing fees, so obviously your solicitor fees, and also any broker fees if you are going through a broker. So it's basically just standard mortgage fees, but the only difference is they are a lot higher. So you have to be prepared for that. Does it matter who I rent the property out to? Yes. Yes, it does. And the reason for that is because there's basically two types of buy-to-let mortgages. You've got your standard buy-to-let mortgage, which isn't actually a regulated product. And then you've got your consumer buy-to-let, which is a regulated product, so it works in a very similar manner to a residential mortgage. So the reason there are two different types is purely the fact that consumer buy-to-let just aims to protect you as an individual that little bit more, because they class you as a part-time landlord. So they're not classing you as somebody who's wanting to make money. Instead, as I say, they class you as a part-time landlord, whatever that means. Now with a buy-to-let, they're actually classing you as a professional landlord. So even if it's your first ever property, as long as you're not renting it out to a close relative, family member, whatever it may be, then you'll be classed as a professional landlord, because your aim is to almost turn that into a business, because it's an investment, so it's going to generate income for you. Whereas often if you're renting it out to a family member, for example, you tend to do it at kind of mate rates, don't you? And if you don't, then wow, you're tight. Only kidding. But yeah, the main reason is the fact that a consumer buy-to-let just gives you more protection as an individual compared with the buy-to-let, which isn't actually regulated. And also something to bear in mind is the fact that with a consumer buy-to-let, the affordability assessment is very, very similar to a normal residential mortgage. So they do take more of your income into account rather than kind of just looking at the rental income. So if you've already got a lot of commitments, a lot of outgoings, that could go against you, and it may mean not getting the property. Where can I get a buy-to-let mortgage? So I know I always say this, and I am biased at the end of the day because I work for one, but always speak to an independent mortgage advisor. And the reason for that is because they've got access to the whole of market to be able to provide you with the best solution based obviously on your needs, on the amount of deposit you have available, just on your plans in general, because they can take all of that into account to come up with the most fitted solution for you, rather than you going off, I don't know, a comparison website or whatever and just going for the cheapest rate, because more often than not that isn't gonna work for you. And also the advertised rates are very, very misleading, because what you'll find on a lot of these websites is that they want to entice you with very, very low interest rates, so like 1% and whatnot. But in actual fact, in order to get that 1% rate, you need to put down like a 50% deposit, which, let's face it, for a lot of us, especially as first-time landlords, isn't something we have readily available. So yeah, they are very misleading, whereas a mortgage advisor will purely pick out the products that are suitable for you. Can I buy a buy-to-let property as a first-time buyer? Now, this is a very interesting question, because some lenders will allow it. So I guess the short answer is yes. However, it massively reduces the pool of available lenders, because a lot of them want you to already have owned a property. So they ideally want you to own your own house before jumping into being a landlord. But as I said, there are a handful of lenders out there that will consider first-time buyers for a buy-to-let mortgage. However, do not get that confused with first-time landlords, because a first-time landlord is someone who's just bought the first buy-to-let property, but in most cases that person already owns a residential property, so the one that they're actually living in. But as I say, it is possible. So once again, speak to an experienced mortgage advisor, as they'll be able to point you in the right direction rather than you having to jump through hoops to be able to find one. And finally, how is the mortgage repaid? So as I previously mentioned, buy-to-let mortgages tend to be on an interest-only basis. So there are really two options here. Now, most lenders assume that when your mortgage comes to the end of its term, you're just going to sell that property and repay the mortgage. Now, that could be your plan. However, a lot of people don't want to do that. You know, they want to keep that property for a long time. So your other alternative is to actually make capital payments into your mortgage account on a regular basis. So depending on what type of product you end up choosing, you know, whether it's a fixed rate, whether it's a variable rate. And once again, if you don't know the difference between the two, I do already have a video on that, so I'll pop it up here for you to have a look at. But going back to it, even with a fixed rate, you can overpay up to 10% of the outstanding mortgage balance every single year, which will allow you to obviously pay off the mortgage a lot earlier if you wish to. So I guess with this one, you just need to figure out what your longer term plan is. And personally, I would look to repay the mortgage, because then the property is fully yours and you don't have to worry about, you know, repossessions and whatnot. Not that I'm saying that, you know, that would be the case, but you never know, right? So yeah, you either sell the property at the end of your mortgage or you make overpayments throughout the term of the mortgage. So guys, this is it for today's video. I really hope you found it useful and it's given you some food for thought when considering a buy-to-let mortgage. As always, if you have any further questions, feel free to pop them in the comments section down below or email me and I'll be more than happy to help. So with that being said, if you like this video, please give it a big thumbs up and also subscribe to my channel down below, and I'll see you guys back on Monday with a brand new video. Bye guys!